I recently asked ChatGPT to give me a trading strategy to turn $100 into $10,000 fast, and it gave me some tips such as focus on highly volatile assets, use technical analysis, be disciplined, yeah, we all know that. Nothing specific. So I decided to be more specific with my question. I went ahead and asked it to create the best strategy using an AI-based trading view indicator called the machine learning. This indicator is currently going absolutely viral. I also mentioned that the strategy's goal is to turn $100 into $10,000 in the shortest amount of time possible. It provided me with a detailed strategy. It wasn't really perfect, so I had to make some tweaks here and there, and here it is, the final setup. To check if the strategy actually works, I will test it 100 times. For that, I will use the price of Ethereum on a 3-minute time frame. But before I do that, let's actually open the charts and add the indicators. So the strategy includes 3 free TradingView tools. I will explain how each indicator works as we add them one by one. So for the first indicator, let's add the machine learning KNN based strategy. Let's thank the creator Capissimo for this amazing indicator. The machine learning strategy works by analyzing historical market data and predicting the direction of future price movements based on patterns in the data. KNN is a classification algorithm that determines the class of a data point based on its nearest neighbors in a feature space. In the context of trading, KNN can be used to classify whether a stock price is likely to go up or down based on its historical data. To use KNN for trading, historical price data is first collected and transformed into a feature vector. The feature vector can include technical indicators such as moving averages, the relative strength index, and momentum indicators. The KNN algorithm is then applied to the feature vectors to classify whether the stock price is likely to increase or decrease. This indicator is not repainting, however, you do have to wait for the candle bar to close before you can consider a signal to be valid. It is also very simple to read. The indicator basically prints blue and pink labels which are buy and sell signals. Depending on the strength of the signals, labels may have lower or higher opacity. Of course, we cannot use this indicator on its own as this will lead to a lot of false signals. That's why we need to add the next indicator, which is called the EMA ribbon by Dominic Ossoletti. The exponential moving average ribbon is a trading indicator that consists of multiple exponential moving averages plotted on a price chart. This tool is used to identify the direction and strength of a trend in the market. The EMA ribbon is created by plotting several EMAs with different time periods. The moving averages are then stacked on top of each other, creating a ribbon-like appearance on the chart. When the ribbon is sloping upwards, it indicates that the market is in an uptrend, and when the ribbon is sloping downwards, it indicates that the market is in a downtrend. The EMA ribbon will help us identify potential buy or sell signals based on the direction of the trend and the location of the price relative to the moving averages. As we can see, this EMA ribbon indicator comes with buy and sell signals. Since we already have a buy and sell indicator on a chart, which is the machine learning, let's actually disable those EMA ribbon signals. If we take a look at the chart, we can see that this indicator does filter out a lot of fake signals, but there are still some left. That's why ChatGPT suggested using the relative strength index as secondary confirmation. As you probably know, the RSI is used in trading to measure the strength of a security's price action. It is displayed as a line on a chart that ranges from 0 to 100. When the RSI is above 70, it is generally considered overbought, and when it is below 30, it is generally considered oversold. As part of our strategy, we will make the RSI more sensitive. This way we will get more valid trade entries. So open the style of the indicator and change the RSI upper band to 60 and the RSI lower band to 40. Okay, the setup is complete. Now let's move on to the entry conditions. For a long trade, the following must be met. First, the price must be closed above the 200 EMA. The ribbon must also be above the 200 EMA. In addition, it must be green. Second, the price must pull back into the ribbon without closing below the long-term EMA. The machine learning strategy must then print a blue label. Lastly, the RSI must be oversold prior to the buy signal. As soon as these conditions are met, you can open a long trade. Set the stop loss below the recent swing low. Target 2 times the risk. Once you have made a quarter of the profit, adjust the stop loss to the break-even price. For example, you risk 5% of your account per trade in order to make 10. The price moves in your direction and the unrealized profit is running at 2.5%, which is a quarter of your target. As soon as that happens, adjust the stop loss and secure the trade. Here's one more example just so you fully understand the strategy. We can see that the price is in a clear uptrend. The RSI became oversold, which signals that we can purchase the security at a discounted price. Then the machine learning printed a buy label. We follow the rules and execute the trade. Do the opposite for short trades. First, wait until the price and the ribbon fall below the 200 EMA. The ribbon must become red. The price must pull back into the ribbon without closing above the 200 EMA. The RSI must become overbought during the pullback. After that, wait for machine learning to give a final confirmation. There is one more important note I forgot to mention. Do not enter the trade if the RSI turned oversold at the time the sell signal was issued. Open a short trade only if all the rules are in place. Set the stop loss above the recent swing high and target 2 times the risk. Move the stop loss to the break even once a quarter of the profit is made. Okay, now once we know the rules, let's move on to the backtesting results. So the starting account balance was set at $100, and after 100 trades the strategy increased it to $19,527. I find it funny that the strategy's win ratio isn't even the highest out of all the strategies I've tested so far. The truth is, this particular strategy involves a bit higher risk than the usual strategy you might find on my channel. You've probably noticed by now that the risk per trade was set at 5% instead of 2%. It's no secret that such risk involves higher drawdowns, but it also gives you a higher reward. By no means am I saying that you should risk 5% of your account per trade, especially if you have a bigger account. But if your goal is to grow a small account fast, this risk per trade might be appropriate. So give the strategy a try, but don't skip the forward testing phase on a paper account.